Don't get suckered. Don't get suckered. So if you've been keeping score, then you know that currently crypto is in a bear market, and it's easy to tell, right? Because when prices in a market drop below 20% from their recent highs, it is generally recognized that we are in bear territory. And besides seeing that right now in the crypto market, we have also recently seen like extreme pessimism and extreme fear from buyers, keeping the prices of some of our strongest assets at levels we haven't seen in over 2 years. Now, the thing about bear markets is we don't know how long they'll last. I mean, the shortest bear market in history lasted a whopping 33 days, and that was at the beginning of 2020 when the world basically shut down because of the coronavirus pandemic. And the longest bear market in history lasted over 5 years back in the early 1940s, and it took the world a great deal of time to really recover from it. So to be quite honest, in terms of longevity, we really don't know what we're up against. However, something we do know is investor behavior. If you're watching this video right now, you and I have the unique advantage of being able to learn from history and avoid certain market plays that could potentially gobble up your portfolio. So go ahead and hit that like button and subscribe to the channel, because today you're going to learn about some cryptos that you absolutely need to avoid. You're going to see some actual cryptos, but you're also going to see the problem with those cryptos. So if you come across similar assets, then you know what to look out for. And of course, none of this is financial advice. We're just going to have a little fun today. So let's jump in. So there are three main phases in a bear market. There is before the bear market, there is during the bear market, and of course, there is after the bear market. And I'm only mentioning this to set the groundwork. I want to point out something very significant to you, but I first want to build a foundation of understanding so when we get to that point, you understand why it all makes sense. You see, before a bear market happens, there is extreme optimism. And this is because in a bull market, which is the opposite of a bear market, your investments are doing very, very well. I mean, everyone's making money. We're all super confident about the market, and our only care in the world is what color Lambo we should buy. And so this extreme positive sentiment also drives investors to enter into risky positions. I mean, we saw the birth and rise of numerous meme coins that had zero utility, but because it either included Elon's name or the random contents of one of his tweets, the token would capture investors and hit like these ridiculous numbers. But besides retail investors shooting for the moon, you also had institutional investors who were playing the market like they were just completely bulletproof. Three Arrows Capital, a crypto hedge fund that launched back in 2012, right now is going through a nasty liquidation process, which is basically a scenario where the company is forced to sell their assets at a significant loss to cover their debts. But this is happening to them because they were severely over leveraged. Unfortunately, their firm got swept up in the Luna fiasco and took a major hit, losing like $200 million investing in the Terra Luna blockchain. But it didn't really stop there. Three Arrows had a $600 million loan with Voyager and multiple margin positions, which is sort of like a loan with BlockFi and Genesis and FTX and Deribit and BitMEX. Now the company has already defaulted on his loan to Voyager and is scrambling to sell out of their other positions to cover a portion of the overall losses. Now, my point is that the founders of Three Arrows are big believers in crypto and believe that the bull market we were in was going to last a lot longer and the prices we were seeing were going to go much, much higher. I mean, the founders would regularly tweet throughout 2021 about how we were in a super cycle and BTC could rocket to over $1 million per coin, which would have been awesome. And so their extreme optimism fueled all the big bets they took and the additional risk they entered into. And let me say, they weren't the only ones. BlockFi and Voyager are both being bailed out right now by FTX because of liquidity issues, and the Celsius network, guys, has locked the gates on their customers and is not allowing withdrawals from their platform for the same reason, which is crazy. Again, this all comes down to the choices that were made in the bull market. Now, in a bear market, the decision-making process is much different. Not only are investors limiting risk, but institutional investors generally need to offset the choices they made in the bull market. In a bear market, people sell, which drives the prices down, which creates significant losses all around. Did that rhyme? I think it did. Anyways, you know this part already. If you invest in crypto, you're probably already feeling that sting right now, but this basically brings us to where we are currently. Sentiment is low and portfolio balances are low, and we're all thirsty for some sweet, juicy gains. And so, of course, retail investors are going to jump at any opportunity to make up some ground, but that's not where the threat is. The place where you need to be looking over your shoulder is where the big money lives. I mean, there are large venture capitalist firms that are heavily invested in the space, and they're out there looking for a profit. And just like Three Arrows Capital was caught off guard and Celsius Network was caught off guard, there are other firms out there that didn't expect this bear market and will need to recoup their losses. In the crypto world, we throw around the term HODL, which basically means to hold your crypto and not sell out of a position. And you know what? I get it. I'm a hodler, but I have the liberty to make that choice. When your business is to make the right crypto picks and performance is sometimes measured on a quarterly basis, your goal is different, and therefore the way you play the game is very different. So there are currently VC firms that need to show some gains either immediately or in the immediate future. And they'll need somebody to be liquidity for them. And so here's what I'm looking out for and staying away from. And before I show you this, I just want to say, I'm not saying to not buy or to buy something. I believe that you can make money in any type of storm if you know how to navigate it. I'm just going to show you a couple of examples to illustrate my point. Cool? Great. So the first example is this one right here, a token named COMP or COMP. And this is a token for Compound, a DeFi lending platform. Now, if you go to their CoinMarketCap page and read a little bit about Compound, it actually sounds like in the long run, the project has some potential. I mean, DeFi is hot and not really going anywhere, and it looks like they have a pretty good team. But what concerns me is when you get down to how their total supply of tokens is distributed. So out of 10 million tokens, about 5 million or about half of the tokens will go to the Compound users, which sounds great, but 2.4 million basically go to investors and another 2.2 million go to founders and the team, which essentially accounts for the other half of the token supply. So think about this. There are early investors and team members who have seen a sharp decline on their holdings and will definitely be looking to see some profits. Now, I'm not saying that these guys will want to completely sell out of their positions, nor am I saying that they would sell and take profit all at once. But what I am saying is most of them, they're already in profit because they got into the project at the beginning really early when the prices were much lower. And so if a substantial relief rally happens, they're going to want to sell something to realize gains that they missed when the price was on the way down. So another example is this one right here, Celo. And Celo is, again, I mean, it's a very interesting project. They are a blockchain ecosystem that is looking to bridge the Web3 world with smartphone users. Pretty big if you think about it. Now, if you go to their CoinMarketCap page, you get to learn more about the project and you get a glimpse into the incredible talent they've been able to add to their team. I mean, this project was founded by people who previously held positions at MIT, Circle, the Federal Reserve, the Department of Justice, and Bank of America, just to name a few. I mean, this is a strong idea with a strong team. And so if you visit the About page on their website, I mean, you really wouldn't be surprised when you see the notable investors who got in early to back this project. A16Z, Polychain Capital, Jack Dorsey, Naval, and Coinbase. I mean, this is a serious list, but with so many notable names and VC firms that make it their business to see gains from their investments, it would be more than reasonable to believe that the first sign of a pump will result in some taking profit. And so what you need to be looking out for are projects that are heavily backed by big VC money. As I mentioned, retailers, we can hold on to a token for years. And technically VCs can too, but they can only do that if it makes sense. But if opportunity is there, you better bet they will not hesitate to take it, especially those firms who took some big risky swings during the bull run. When prices are low like this, we all want to see signs of life. We all want nothing more than to see bullish indicators that the market is turning around and we're all headed for the moon. But be cautious, because many pumps could actually be traps to turn you into liquidity for those who need to see some gains. And you know what? The projects that I mentioned may actually be great plays if your intention is to hold them for the long term without touching them. But in the short run, in this current bear market, my strategy is to avoid these types of cryptos until the dust settles. But let me know your thoughts. What cryptos are you avoiding in this bear market? Please let me know in the comments. Also, what cryptos are the best to buy in a bear market? Please also let me know in the comments. And lastly, I want to thank you for your time. Your time is so important to me, so I do hope you found value, and until next time.